QuickBooks Pro Desktop 2021. Forward contract for speculation that foreign currency will strengthen. Maturity transaction for accounts payable. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our multiple currencies forward contract problem 2 practice problem. We currently have our open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we put the forward contract on the books. We did adjusting entries as of the end of the year. Then we closed up the forward contract for the receivable side of things. And now we should have the fairly easy part of closing things up on the payable side of things. So let's take a look at where we are at by going to the reports dropdown, company and financial, down to that good old balance sheet standard balance sheet, changing the dates up top from 01/01/22 to 12/31/22. Then we're going to say okay. And then we have our accounts payable now here. This one was in dollars, or is in dollars. So it's simply going to be paid off as we close up the contract. Let's review it real quick in Excel so we can review what we have here. We put the contract on the books, the receivable side being in foreign currency, that being the one that we have to change and adjust over time as there's a fluctuation between the currencies. The payable we put on the books and left it there as dollars. So we're going to be paying off the payable in dollars. We then made an adjusting entry at the end of the period for the receivable side of things. Didn't do anything to the payable side of things because we don't have to, because we're going to be paying it off in dollars. And then we went down here and said, now we're going to close things out. We did another entry in Excel at least to adjust this receivable so that we can then receive it and have the current exchange rate, which would be the spot rate. And now we have the cash and the receivable has been gone. And then we closed out the payable, simply paying off the payable, resulting in this case of $1,000 loss in the current time period. So our and then we had a $300 gain in the prior period in a total over the two, or overall we had a $700 loss. So it wasn't a very good projection. so now let's do that over here. So all we have to do then is record the payment for the payable. So I'm going to go back onto the home page. We're just going to be paying it with Simply Cash. We entered the bill to put it on the books. Now we're going to go to the pay bill. Pay bill. Bill needs to be paid. Bill's very demanding. So I'm going to hit the checkbox, and then we want to say that we're going to be paying that. There's the due date. We're going to take it out of the checking account, so that looks good. And then we want to have this as of 03/31/22. 03/31/22. This should be then decreasing the cash. Other side then going to the accounts payable. Let's say we want to assign the check number, and that looks good. So let's pay bill. Pay bill, and then I'm just going to call it E3. So we'll pay that off and say okay, and then okay. And then I'm going to close this up, back to the balance sheet. And now the accounts payable is back down to 0. If we go into the checking account, that's the Australian checking account. That's not the right one. We want the US dollar checking account. We see that we have this paid off. So there's the $60,900. If we double click on that, of course, it looks like a check. Now it takes us to this screen where we paid off basically an accounts payable type of item. Closing this back out. Then the other side went to the accounts payable, so it has now been closed out. Then if we take a look at the trial balance at this point, go into the reports drop down, accounting and taxes, trial balance. I'm going to run this from 01/01/22 to 12/31/22. This is where we stand at the end of the day here. So we have our checking account, and then we have our Australian dollars retained earnings at the 100,003, and then the gain that we had a gain last year and a loss this year, so it nets out to a net loss for our projected contract that we put together. So it wasn't a very good projection after all. It was looking good after the first year, but not so good after all. So that's where we ended up. We can also do a projection on this in another way, meaning we could estimate that the currency is going to weaken compared to the dollar, And then we could set up our transaction to basically be set up in the opposite format, the account payable then being the one that's in foreign currency, meaning we're going to be paying off in foreign currency, and the receivable then being fixed in dollars. And so we may look at a transaction like that in a future presentation.